What to do with $10,000 in savings? Boost 401k savings. Using $10,000 in savings to increase your 401k savings is a great idea, especially if your employer matches contributions. Say your employer matches your contributions up to 5% of your pay, but you're currently only contributing 3%. In that case, you're essentially forfeiting 2% of your monthly salary. Consider increasing your contributions to the company match level. The 2021 contribution limit on 401k plans is $19,500. The catch-up contribution those age 50 and over can add is $6,500, for a total of $26,000. In 2022, the limit goes up to $20,500, plus the additional catch-up. Which means if you're age 50 or older, you could put away $27,000. Open an individual retirement account, IRA. There are two options for individual retirement accounts, IRAs, traditional and Roth. The main difference is the tax treatment of contributions and withdrawals. You can write off contributions on your taxes each year with a traditional IRA, but your withdrawals are taxed during retirement. With a Roth IRA, you contribute after-tax dollars but pay no taxes on withdrawals. Make sure you check out the Internal Revenue Service, IRS, website for a complete list of restrictions, penalties, and other terms. For 2022, the contribution limit is the same as it was for 2021. For both IRAs, $6,000, or $7,000 for those 50 and older. Start a college fund. You may also want to take your nest egg and invest it in your child's college fund. The cost of college continues to rise, and anything you can do to help pay for these expenses can help your children decrease their reliance on student loans. Notably, 529 contributions are not deductible on federal taxes, but they might be deductible on your state income tax return, depending on where you live. One of the key benefits of investing more of your money in your 401k, IRA, or in a 529 is that you're effectively investing in the stock market. While it is riskier than your checking or savings account, you can expect to get a much better return on investment, ROI, over time. From 1926 through 2020, the average annual return of the S&P 500 was around 12%, not adjusted for inflation, which easily tops most savings accounts. Increase your mortgage payments. Say you're 10 years into a $200,000, 30-year fixed mortgage at 6%. Increasing your monthly payment by just $100 could save nearly $19,000 over the life of the loan, and you'll pay off your mortgage almost 3 years earlier. In many cases, the rate on your mortgage, with the current average 30-year fixed mortgage rate being around 3%, is higher than savings account rates. Pay down debt. Using some of your $10,000 in savings to pay off high-interest credit card or other loan debt is usually the best first step. That's because the high interest rates charged on most credit cards and consumer loans mean you're effectively losing money. That is, the money you'd make investing that $10,000 in savings into an investment account or savings account would be less than the interest charged on your debt.